Hello and welcome back to Ardhabodhi's YouTube channel. First of all, thank you so much for subscribing and watching the videos that I made last week. And the intent is to create more easy content about financial planning and how you can grow your wealth and understand the different products that are available. So, in the last two videos, we tried to cover uh, why financial planning is important, what are the do's and don'ts, and also we spoke about emergency funds, why emergency funds, what you should look at when it is about emergency funds. Now let us now look at this in this video. What are the kinds of investment options that are available for us, and how to choose them, and what are the pros and cons of these investment options? So that is what we will cover in today's video. So let's get going. The first type of typical investment opportunity that is available to all of us is fixed deposits. Traditionally, our families have been investing into FDs, right? These FDs are issued by banks, nationalized banks, private banks, and there are some corporates also who issue FDs like HDFC Limited, Bajaj Finance, Mahindra, Shriram Transport. These guys also, these are some of the names that I'm taking. These are some of the FDs that are available in the market for us. Now, when it comes to fixed deposits, they come with a fixed rate of interest. Now, they mention that this is the rate of interest that you will get for a year, and it depends on the number of days that you hold the deposit. Typically, they come for 6 months, 9 months, 1 year, 15 months, 2 years, and so on and so forth, right? So, fixed deposits, the pros are capital protection, capital is safe, interest is guaranteed, it is predefined at the beginning of the FD, and you have safety around it, right? So FDs are typically meant for your emergency fund creation or any of the requirements that you have, and where you want the money to be protected, money to be safe, right? With a small growth on it. Now, FDs typically come in a range of 5 to 7% kind of interest rates. That's about the FDs. Here, the pros are capital is protected. Con is basically the downside of FD is they are not inflation beating. So, what is happening is when the money is in FD, your money is not growing, it is just there where it is, or rather, it is eroding the value of the money because of the inflation. Now, you all know inflation is an element which uh, erodes your value of the capital that you have. So always in investment options, we have to look at instruments which beat the inflation. So we'll learn about them as well. There are instruments which are available to beat inflation and grow our money. So the first product that we have to look at is FD, which is towards your emergency funds. Now we'll come to the next part. Next part is another favorite for traditionally for us as Indians is your real estate. Now, many of our parents, grandparents, and our uncles and aunts, they are really very very fond of investing in property, right? There is this saying that "Kam aayega," it will be of use later on, right, for our grandchildren, children, and so on and so forth. So, real estate is a good investment or bad investment is something which we have to think about in this direction. The way I will explain it now. So when you talk about real estate as an investment, first thing is capital intense. It requires a lot of money to invest into a real estate. Okay. So one is capital intense. Assume that we have that capital to invest into real estate. The next step to think is, okay, if I put into real estate, how much return I am getting it as a rental yield. So I will put it, I will buy a property, either residential or commercial, and put it on rent. What is the kind of rental income that I'm getting? Is that rental income after minusing all the expenses that are there, maintenance expenses, repairs, and all that? If I remove that, the net rental amount, how much percentage it is on the capital that I invested? Is it at least equivalent to FD rates of interest, or is it less than that, or is it more than that? This is one way of looking at it. At least it has to beat FD returns, right? Only then it makes sense to lock the money there. The second thing to look at is where is the real estate located? what is the demand and supply of real estate in that location? Are we going to get rental yields continuously? Is it a popular area where people require it on rental, right? Another thing to look at it, how is it growing in terms of the value of the capital? See, we always have to think two things, right? One is an income getting generated from it. Two, is it beating inflation or not? So FDs, we know it won't beat inflation. It is capital protected. So any other investment that we choose, we have to think about it, whether it is it going to beat inflation or not. So understand where it is located, what is the demand and supply, what is the kind of growth rate in that locality, is it going to beat inflation or not, how many times it had beaten inflation, so on and so forth. These are the basic checks that you need to do before choosing real estate as an investment opportunity. Now we'll come to the third most favorite, for our parents, grandparents. Again, gold. Now, gold, is it a good investment or bad investment? Remember one thing, every product that is available in the market is made for someone. It is suitable for someone, right? It's not necessary that every product that is available is suitable to everyone. Okay, we have to figure out whether it suits our requirement or not. So, gold as an investment, again, traditionally, we all have gold as jewelry. So, consider that also as a part of your investment. Jewelry is also part of an investment. Apart from that, if we want to invest still further into gold, then look at options which are like, you can easily invest and there is no restriction or there is no fear of, where do I which locker should I put it? How do I safeguard it? All these questions come, right? It is not easy to handle gold. Where will you store it? How will you store it, right? So you can look at products like sovereign gold bonds. Sovereign gold bonds invest into gold, and it is like locked in for few years. The government of India actually releases this issuance of sovereign gold bonds at various different points in time. That comes to you, the information can come to you through your bank, wherever you hold a bank account. They also send you notifications that now sovereign gold bond issue number so and so is open. It is open for so many days. You can subscribe it via net banking and so on. So basically, it also they also give a certificate, and that certificate is a proof that you hold this many grams of gold at so and so rate, and sovereign gold bond is valid for is locked in for so many years. Interest also gets credited twice in a year. Half yearly it gets credited to the account. Interest is very nominal, but it's again another form of asset allocation for you. So the most simplest way to invest into gold and take the this price jump which happens in gold via SGB also. You don't have to accumulate physical gold in that sense. Okay. Now, physical gold, another problem is if you suppose have coins or biscuits or something, when you go to the jeweler and sell it, it is mostly like they ask you to buy gold against gold. It's very rare that you get cash out of it, right? So SGB solves that purpose for you. SGB takes care of transactions. Easily you can sell it and buy it. So that's another important, another kind of product that is available for us. Now we'll come to the next part. The next option available for us is direct stocks. Now you would have heard about stock markets. Everybody talks about stocks buying and selling. Thanks to so many, technologies that are developed, we have so many apps which allow us to buy and sell stocks, right? Now, stock in simple terms means owning a particular portion of a company. Now, whenever the company is making profits or losses, you are a part holder of that profit and losses. So you're contributing capital for a company to grow its business. So you are part owner and you participate in the profits or losses of the company. That is what is equity about. Now, equity historically, it had given very decent returns. Inflation beating returns will come only from equities. Having said that, the challenge in equity is to select the right stock and buy it at a right price and sell it at a right price, right? It requires a specific skill set. You need to have an understanding about the company. You should know how to read balance sheets, financial statements. You should know what is PE ratio, what kind of dividends are being issued by the company, how the company is doing, and all that stuff, which industry it belongs to, whether that industry is doing good or not. All there are so many dynamics. These are few things that I'm telling, but to analyze a stock, you need to know a lot of things about the industry, company, management, everything, right? So it's a very specific skill set required to invest into stock markets. Now, the pro is that the good part of it is that's the only instrument which beats inflation and allows you to grow your money. The con is it's very difficult to figure out which one to invest and where to invest, right? That's about the direct stocks. Now, coming to the fourth option that is available for us, rather fifth option that is available to us is mutual funds. Now, we know the challenges that we face in direct stocks, right? It's very difficult to pick. So that's where the mutual fund comes to the rescue. Mutual funds actually help you invest into stocks, equity mutual funds, help you invest into these direct stocks. And there are professional managers who are sitting there and analyzing, researching about the companies, where to invest, when to invest, how, when to, come out of it, all that stuff. Professionals are managing it. All that we need to do is invest regularly and via mutual funds and participate into the equities, right? Again, because it is investing into equity mutual funds have this advantage of beating inflation and creating wealth for you. Now, within mutual funds, you have different categories that are available for us. So one is large cap, one is mid cap, and the another is small cap, and there are sectoral funds. When you go and see online, there are, when you type types of mutual funds, huge list appears before you. There are so many concepts involved in so many types of mutual funds involved there. And again, there is a challenge as to which one to pick and which is right for me, right? So I will cover about in detail about every type of mutual fund in next video of mine. So for now, I will just summarize what we covered. The types of investments that are available for us are FDs, corporate FDs. Then second is real estate. Third is gold. Then direct stocks. And then fifth is your mutual funds. So these are typical investment options that are available to us to grow our investments. Now, the idea is to figure out which one suits to us for what type of goal. So some things are meant for capital protection. We'll see the products which are available for capital protection. When we talk about inflation beating returns, growth of the capital, we will look at a certain type of instruments like equity and mutual funds. Okay, I will cover more of mutual funds in my next video. Thank you so much for watching this video. Please do like, share, subscribe, and share it with your friends too. Hope to see you soon again.